there's something strange happening. While retail investors chase iStock's crypto cycles, tech IPOs, billionaires are quietly increasing exposure to gold. Not loudly, not on CNBC panels. Quietly, so here's the real question. What do they know that you don't? Because gold doesn't generate cash flow. It doesn't innovate. It doesn't scale. And yet in times of stress, it moves into elite portfolios. This isn't about hype, it's about positioning. And once you see the pattern, you can't unsee it. Most people assume the financial system is permanent. Billionaires don't. They've studied history. Every monetary regime eventually resets. The US dollar was tied to gold until 1971. Then President Richard Nixon ended convertibility. That single decision changed money forever. Since then, US debt $398 billion to over $30 trillion. Dollar purchasing power down over 85 Fed balance sheet under $1 trillion to over $8 trillion. Billionaires understand something subtle. The system doesn't collapse suddenly. It slowly inflates. Gold isn't protection from collapse. It's protection from erosion. And erosion is harder to notice. In 1933, President Franklin D. Roosevelt made private gold ownership illegal. Americans were forced to surrender it. Shortly after, the dollar was devalued against gold. Most people never think about this, billionaires do. Because that event proved something critical. If a crisis is large enough, governments change rules. Legally, old American wealth learned to diversify jurisdiction, diversify custody, diversify risk. Gold became not just a hedge, but a sovereignty tool. When Lehman Brothers collapsed in 2008, it held $639 billion in assets. For a moment, the system froze. Money market funds broke the buck. Interbank lending stopped. The Federal Reserve expanded aggressively. Gold went from around $700 to over $1,900 in the following years. But here's what most people miss. Billionaires didn't buy gold for profit. They bought it because they saw fragility. Brokerage balances are claims. Bank deposits are liabilities. Gold is settlement. It doesn't depend on a counterparty. That difference matters in systemic stress. The Rockefeller family didn't survive 150+ years by chasing trends. They survived by avoiding extinction events. There's a massive difference. Retail investors optimize returns. Dynastic wealth optimizes survival. If AI doubles your portfolio, great. If inflation cuts purchasing power in half over 20 years, devastating. Gold historically performs best when real interest rates are negative. Inflation accelerates. Currency confidence weakens. Those conditions have happened repeatedly in modern America. Billionaires don't predict the exact trigger, they prepare for cycles. If gold is outdated, why are central banks buying it at record levels? Over 1,000 metric tons in both 2022 and 2023. Central banks don't speculate emotionally, they hedge systemic risk. And here's the uncomfortable reality. When sovereign reserves were frozen in 2022, it proved something: assets inside systems can be restricted. Gold held physically cannot be digitally frozen. Billionaires watch central banks because central banks see risk first. So what do billionaires know about gold? They know the system works until it doesn't. They don't expect collapse tomorrow. They expect volatility across decades. Gold is not about betting against America. It's about betting on historical cycles. It's not anti-dollar, it's anti-overexposure. It's portfolio insurance against monetary expansion, policy shifts, banking instability, geopolitical fragmentation. They don't talk about it publicly because gold is boring in good times. It's powerful in unstable ones. Here is the real difference between retail investors and billionaires. Retail asks, how much can I make? Billionaires ask, what can permanently destroy me? Gold answers the second question, and that's the one that matters at scale. So when you see headlines about AI, crypto, tech rallies, remember this: somewhere in a vault you'll never see metal as being stacked. Not loudly, not emotionally, strategically. Because billionaires don't just invest for growth. They invest for continuity, and continuity is invisible until it's priceless. Within these hidden files, patterns of wealth emerge. The key is in the details. Subscribe now.